Alrighty. Hello, everybody, and welcome to another trading stream. I'm Boss Joe Boss. And let's get right on into the charts. Actually, let me triple check that everything's good. Everything is good. All right. We had a major bounce on oil today. We dropped 4%. And in the time it took just to start the stream, we have rebounded the entire 4%, and the day is currently green for oil. This is kind of nutty. This is insanely nutty. Man. Hello, Ari. Hello, Ani. Nice to see you two in the chat. Very nice. I know Ari's been doing quite phenomenally well on oil. I believe the ticker was UK, right? The one you got your trade on, right? That was UK. That was Brent. And I believe Brent's gonna look the exact same. No, it's gonna have a higher price. You can see how nutty that is. And look at that, you got a peak right there in range probabilities showing you that there's an increased likelihood finding your low for the day at that spot. And now we are at the edge of what I'd consider before you get into the tail of the distribution here on UK oil. Right there, that 75% line, that's the edge of the interquartile range there. Yeah, but see how fat that looked? Man. Okay. We can also look at a 6 hour, and you can see just holding on in there before going into the tail end. For geopolitical reasons, going down here does not make sense right now. And we can actually do a Control F search here for oil. And Strait of Hormuz and oil supply crisis. Strait of Hormuz blockade status. Current situation, Strait remains mostly closed to commercial shipping. Impact is the Middle East oil exports are down at least 60% in week 2, March 15th versus February average. Only 15 vessels traversed Hormuz over the past 3 days. And 8 dry bulk, 5 tankers, 2 LPG. IMO chief, naval escorts will not guarantee safe passage through Strait of Hormuz, so there's going to need to be something done there on the ground or negotiated. Ship owners, says Trump, don't want to take a chance. It's impossible. It's possible. Mines is enough to keep ships away. And there's a lot. We have 37 hits here in this note for oil. And all I did to actually generate this note for you guys today, and actually for everyone in the trading group, I'm going to be sending this to everyone in the trading group. This is actually a summary of the last, 3 days, 2 days since the last stream I said. It's a summary by topic of everything in this news feed that we got right over here. So this is the Plan the Profit Discord, and we have a news feed from Financial Juice built in to the Discord. And all I had to do was say, hey, grab all this information for the last 2 or 3 days and sort by topic. And you can see it has done quite a good job. We can actually look at Cuba, see if there's any new news on Cuba. Cuba is talking to Rubio. We will be doing something very soon. That is very good to hear. Trump administration tells Cuba its president has to go. Okay. Yeah, it's very nice. We can do a Control F search and check out all these notes, check out all this news. and use it to help set some better trading expectations. And right now, it looks like oil has been doing phenomenally, at least on the day for sure. We'll go ahead and move this back. But this is why I also stress to be in the Discord, because we also have research threads, and I can use this exact same tool for analyzing the news, for also analyzing the research threads. So if we post and give extra commentary and our thoughts over time, I can then cover those notes. I can cover that research for all these different research forums. So no matter how many research forums there are, it's going to be rather simple for me now to actually get notes, or rather summaries of all the research threads to cover on stream, even every single day. So I'm actually incredibly happy, and this component of AI is actually going to make me and my streams much more productive and hopefully a lot more engaging for you guys as well. But it's all contingent on contribution in the Discord, providing quality information, providing commentary that you guys enjoy to engage with, providing also your own thoughts, right? It's really, really important to actually have the nuances brought up in there. And I can also dictate to the AI, hey, whenever there's someone in the Discord who is typing up an opinion, and it's a particularly good opinion, it has a lot of positive reactions from other people in the Discord in the research threads, or someone posts a whole thesis, the AI can compare it to other data as well, or other people's commentary as well. And we can actually go over all of these caveats that people bring up and all these theses that people bring up in the Discord. So if the Discord grows to a larger size, I can cover and give shout outs to people who give their own commentary, who give their research, who put their time into it and acknowledge what you guys are doing and saying in there. It feels really, really good. But also, I'm going to still be doing handmade notes. I'm still going to be doing notes mostly on my own, because that's what I've mostly been doing. And this AI, I know where its pitfalls are. It's not going to cover absolutely everything that I want it to cover. However, all I wanted to do today was just to cover news since the last stream. And you can see we got quite a bit here. Economic impact assessments. Australian Treasury, March 18th. Oil at $100 a barrel for the first half. Lower output. Ooh. By mid-2026, that's right. We do actually have another thread open currently on the Australian fuel shortage. And that has not been a particularly good sign for the Australian economy, the Aussie dollar. But yeah, check that out. On oil today, we have risen quite well, quite significantly. I know, Ari, you asked me to check out gold. Wow, gold has fallen off a cliff. I really wonder why this has happened. A lot of people must be rotating out of gold and into oil. That would be my expectation. And frankly, that's what I thought was going to happen a while ago, but wow. Yeah, these are quite volatile times. We can use something that is volatility adjusted, the probability pivot points. And those are the highs. So let's go ahead and look at the lows and see what is the likelihood of finding the low for the month between central pivot and S0.5 using seasonal data. And it's only 13.73%. Let's check out if there's any news on gold here. No, there's 0 hits on gold here in this note on the right-hand side. The probability weighted pivot, which is the pivot point level that is weighted against every single probability here comes to about 46.53 right now. So if I were just looking at these odds as my baseline expectation, I would expect around S1 where the low for the month might come in. We can also check out the timing dots because we are far way up there. Again, these times are usually, oh wow, there are no green dots at all. We're probably gonna have to bump this up to like 1%, give it 3 bars. Wow, there's still no green dots. So this is a very unique high for the month. We do not have any corresponding lows that follow this high. I've actually never seen that before on this indicator, which means this is a very unique data point to be down this far low from that high up. Wow. That is honestly very impressive, but also very scary because that could imply more seeing lower prices. Yeah, we're already crossing below 4,900 here on gold. That is kind of nutty. I don't think the seasonal forecast indicator is going to help us out much. Also, I'm going to do that just so then we have a little bit more screen real estate. Isn't that nice? All these little hotkeys to help with screen real estate. So nice. Okay, let's see here. We can read the executive summary on the right-hand side, and we'll make that larger so it's easier for you guys to see as well. The past 2 days have been dominated by the escalating Iran-Israel war, the closure of the Strait of Hormuz, and global energy supply disruptions. World leaders have made numerous statements regarding military operations, oil markets, and trade relations. Key developments include the assassination of Iranian security chief Ali Larijani, coordinated IEA oil reserve releases, sustained NATO relations, or strained, rather, NATO relations, and delayed Trump Xi summit. Really? So is the Xi summit actually delayed? Let's see here. Trump, meeting reset to take place in 5 weeks. Oh, wow. Would love to go to China, but feel I have to be here in the United States. Yeah. China Foreign Ministry, we will continue to communicate about Trump's visit. Okay. So it's going to be another month until Trump actually meets with Xi. Also, isn't that just so cool? Again, being able to search something from the summary at the very top of the page and then immediately jump down to get specifics and day-by-day breakdowns. It's so nice. And then trade talk progress with China. Iran oil came up a little bit in the China talks. We told China that the open strait is in Beijing's interest. Talks with China were constructive. Gotcha. Okay. Tensions and concerns. White House senior advisor Hassett concerns that Asia may be pulling back on oil exports sold to the U.S. Man, gold just keeps falling. It is down 2% today. It's currently taking a massive hit right now. Yeah, you can see. These are extremely strong, volatile moves here. Wow. Absolutely nutty. I'm going to, real quick, make sure I turn on streamer mode so Discord sends me no notifications. All right. Let's go ahead and start looking at some charts. Let's do euro dollar right off the bat. Wow. Oh, also nice. We're right there at a peak in the distribution. However, when you have such a sharp move lower, you can easily see continuation here. So I would not be surprised to see Euro actually continue to fall here. Actually, all of the US dollar pairs are currently falling like that. So let's full screen this and just go down the chart. Let's now do Aussie dollar and Aussie. Wow, Aussie is already trading kind of in the fatter part of the tail before you get into the thin part of the tail. Yeah, so it's this is gambling area. You don't necessarily know exactly where the low is going to come in yet, and at any moment the low could come in. This there'll be people who buy off these kinds of lows over here, right? There'll be people who buy around here or buy just under here, but I don't necessarily know if I can condone those things because the odds are so low. And also, I was looking at this earlier as I was trying to short around here, and I missed this. Check that out. If only, that would have been a very nice little trade to have. Getting short right here at the peak in the ranges. If we actually look at the timing dots to assess, and I also have to resize the percent bounds real quick. So yeah, there's only one dot on the low end here, it seems. Yep. Well, I would not be surprised if that actually was the top for the week. I would not be surprised if that actually is the top for the week. We can actually start looking at closing odds now. Yeah, something along these lines. If I can just get the correct drawing tool. Where is the arrow? There it is. Something along these lines would be around where my expectation currently is. Want this to be blue, and we'll timestamp this as 2026-03-18, and the current time is 05:51. So that would be my net expectation, to just pull down and have a big fat top wick on the week. We'll go on to the next one here. Oh, you got an Aussie dollar short in. Man. All right, you've been on a roll. You got oil, you got Aussie dollar, man. Fucking congrats, some nice wins. Let's go ahead and check out Euro dollar real quick on this weekly. It doesn't look as, yeah. Oh wow, it got close to that top and close to these dots here. That really would have been an excellent spot to hit the short. But as far as end of week trade plans go, this one's probably gonna be a bit stronger. If we check out New Zealand dollar, and then we'll check out the Aussie New Zealand cross pair. Yeah, this one's also probably going to end up either bouncing up one more time or going sideways. By bouncing up one more time, I just mean it's going to depend on oil. However, it's going to mostly be in this area here because we're already trading in the higher probability areas already. So I feel more confident putting in the timestamp for today here, right? And then 0553, and also we'll copy that into the clipboard. Now, one other thing that could be helpful, actually, in doing this analysis is to use the probability pivot points with closing data to find out where the likely close is between any two pivots on a seasonal basis. Well, yeah, so somewhere either between R1 and S0.5, if we're just looking at ranges, which is non-seasonal data, it's leaning towards here. So I actually might want to say it goes more sideways-ish around central pivot. So kind of a split between the seasonal and the non-seasonal data here. Okay. And then we can do the same thing for Aussie dollar, to be fair. And actually, the closes are much more strong around this area. So I might say it does drift maybe a bit. But I'm okay with saying we likely close between central pivot R0.5 unless we get significantly higher oil prices. And it does look like that is going to end up being the case here. Because if you're just looking at the ranges and the probability of closing for probability pivots, yeah, we're very likely going to end the week between R0.5 and central pivot here. And it doesn't seem like that the war is going to be ending anytime soon, guys. So I would not be surprised to continue to see oil drift up higher from here. 6:03:18. Oh, that's right. We have this timestamped, right? And we can just update that. Now we can do Aussie New Zealand. Check out that cross. And so far, it's been going sideways for the last about day and a half, or about the last day. Let's see, are we at any peaks? Yes, we are. We are at a peak right now. So maybe the expectation is that the New Zealand dollar starts to outperform the Aussie dollar shortly. Okay. Sure. We can set a more nominal expectation like so. So these are all end of week trade plans. Now we can go to dollar CAD. Dollar CAD looks like it's got a big magnet right here to go higher. It sure does. All right, let's also look at the seasonal data real quick. Oh, wow. We have never in the last 20 some odd years had the close for dollar CAD between R0.5 and R1 for this particular trading week seasonally. We've never had the close around here, so that biases me more towards a more gradual move. And that might be because Canada is a more oil producing country. You know, they produce a lot of their own oil and they're exporting to a lot of countries right now. So they are benefiting from it, but there's a lot of risk off flows going into the US dollar. There are a lot of risk off flows going in the US dollar. So maybe just a nice little positive drift here. We can also do, I mean, I would do gold again, but man, it does not look gold is kind of all over the place right now. So if we do gold, yeah, this is saying once you move past S2, if you're expecting a close below S2, the odds are quite low of being able to set a reasonable expectation. Most closes for this particular week are actually fairly bell-shaped, fairly wide though, with most of the closes occurring between S0.5 and R1. So we don't usually so this week seasonally is not usually bearish, but I'm sure we'll be getting some information on why gold has been performing so poorly today. Again, with inflation expectations going higher, all these central banks setting higher inflation expectations, it doesn't make too much sense for me to see gold falling, except for an extremely, extremely strong US dollar. I mean, it could be that, or mining institutions are affected somehow. But even if mining institutions were impacted, that would mean gold supply drops, which would then send this higher. One thing that also could be happening that's extremely reasonable is some countries are selling gold right now to offset costs from higher energy prices, to subsidize those higher energy prices. And you know what? Good for them. That's why you build up those buffers usually in case of emergencies, and also as a form to back credit. So it seems like some countries might just be selling their oil in order to help weather the storm against rising oil prices at the moment, which seems incredibly reasonable to me. Okay, what else can we check out? We can check out urea. Whoa, that's right. Oh, wow. Urea prices look like they fell through floor, but they did not. This is incorrect data on that time frame. Urea prices are now up 31%. We're now fertilizer. This generates nitrogen and fertilizer. That's what urea does, and this can impact food prices. This can make food prices a bit more sticky going forward here. So that's not good. Not good. Oh yeah, dollar yen. We can always check out the dollar yen. Wow. That would have been an excellent trade to keep on going. I did not have that expectation, but man, 600 pips would have been fantastic to keep. That was still nice though. That was still a nice trade right there. Takaishi is coming to the United States and meeting Trump tomorrow. See, this is why I always find it so helpful to put important news events that I find that are planned in the future on the chart. You can see Takaishi meets Trump right here. I put this on like way back over here. I put this on a long time ago. And Takaishi is going to be meeting Trump tomorrow, and I'm sure they'll talk about foreign exchange and how the US dollar is getting really strong. I mean, it's around these levels, around 160, and we've already recently got some threats of intervention in that the Ministry of Finance in Japan is said back over here around 158 that they are watching the dollar yen's volatility and the dollar yen's price, as well as in the last few days here. So it'll very likely be mentioned in Trump's meeting, and we'll see how things progress, whether or not Japan will intervene and send this lower. Because yeah, it just made a brand new high, so we'll have to see how things go. It's just everyone's just holding just below 160. We're gonna see how that meeting goes, and if there's no anything relevant for foreign exchange intervention, then we'll probably pop on the meeting or maybe on the day after. But who knows? There could be a meeting. There actually was a meeting recently with the finance minister of Japan and I believe the US Treasury. And they said that they were going to be watching FX closely. Let's see here. Oh, yeah. Yeah, Big just sent something to me. That's right. Thank you, Ari. GC. We can go here, go to a 12-hour, load up the probability pivots. And we can look at the lows. Check that out. Now, I might be loading different data, I think. Yeah, because that's the Oanda chart. This is the GC futures, which tends to have more data. We can do gold on Oanda, though. So then we can see what Ari was checking out. Yep. So I, again, would be careful going below S2 because it's a guess as to where the low ends up. It is definitely a guess. But yeah, this is why you have to pick, quote unquote, the right chart. You can get different odds depending on the chart that you load. Because the odds are dependent on the chart's history, if the chart's history change how the indicator is loaded because there's different prices provided from one chart to the next, you're going to end up with different odds. So it's important that you stay consistent with whatever asset you're using to use the same chart when you're doing analysis with this indicator. And you generally just want to pick whatever the reputable index is. And by reputable index, I mean wherever pick the chart where the most volume generally is traded. So for example, if you're doing crypto stuff, we can do BTC. And what I'll do is use the Bitcoin all-time history index from TradingView, which is an aggregate. This particular chart is a really, really good chart for these indicators. And we can look at the high odds here. And if we're going to go lower, we'll go below central pivot. And yeah, it looks like the top for the week is probably in on Bitcoin, according to these odds. If we're looking at the close odds, it's probably between R0.5. Yep. There we go, 26% of the time. So I wouldn't be surprised to actually see something along these lines here. Just a bit lower and then a bit higher into the close. And we can put our little timestamp in there, 606. And put our little timestamp in right there, 606. I believe there was a EuroCAD timestamp I had, a EuroCAD trade plan. Wow. Remember this? I did this last week on stream. Check that out. We expected to go lower, and we pivoted right around the time we expected to pivot, right around here. And we are now likely at the top, the expected top for the week. Yeah, check that out. There's our peak in the distribution. And yeah, we just went up and never looked back. Pretty low likelihood of actually finding your top seasonally for the week right here. I was actually expecting a more conservative top between R1 central pivot or to gap up higher past R1 into prices above R1.5. Well, nope, there's still another half of the week that could occur, but if we look at the dots real quick. Yeah. Either from here, if you want to see a new low, you're talking about moving like 200 pips. That's a lot of volatility. And if you're expecting another higher high, it would probably be on the most likely time to see it is on the very, very last bar of the week here on Friday, going into the close practically. So it seems more reasonable to set a more range-bound expectation, something along these lines. And we can set that to blue. And then when the time comes, we will cover week ahead trade plans as well. So yeah, thank you, Ari, for sending me the chart, the Charterino. We can go down the news here and look at some central bank statements if we want. Okay. Reserve Bank of Australia. So this requires us to check out Aussie. However, we also have the Australian equity markets over here. And yeah, the Australian equity markets are not holding up too well today. We have fallen. Looks like we went from a high to a low. Nope. We went just past this peak. And this area is kind of gambling. You gotta set a really... You either have to set a really tight stop before you start trading in this whole space, or you have to set your stop way the hell up there. But wow, it's just fallen through the floor. That is insane today. Australian stock market has not been doing great. RBA raises cash rate 25 basis points. That was over here yesterday. And then it was a 5-4 split decision. Cash rate was not high enough to bring inflation back to target. Inflation picked up materially in the second half of 2025. The Middle East war heightened inflation concerns. Conflict in the Middle East has resulted in sharply higher fuel prices, which, if sustained, will add to inflation. And there are shortage issues right now with these fuel prices. So we are going to be watching in the dedicated trade forum thread on the Aussie fuel shortage. Because apparently there's people who can't even get to work at the moment. There's some people who can't get to work. And so you're not even just talking about inflationary impacts from higher costs. You're talking about growth impacts from people not able to actually get to work. It's a big deal, and it could hurt Australia's economy a bit more deeply than some people might imagine. Forward guidance is uncertain. Today's hike does not say anything about forward path. Okay, so uncertainty, this kind of uncertainty is usually a bellwether for depreciation of many assets in said country. When central banks start using this kind of language where they are quote unquote uncertain about what to expect, and let me just real quick just turn down the music just a hair. Yep. When central banks are totally uncertain about the future path of rate hikes, because short-term expectations keep having to change rapidly, it is a bellwether sign for depreciation in that country's assets. And I mean, there are studies that I've read on explicitly this effect. I have to go and dig them up. I can't just pull them up on the stream right now. But this type of wording sets off alarm bells for a lot of trading systems. This type of phrasing. And for a lot of asset managers, this is extremely bearish. All right, Bullock. Middle Eastern war heightened our concerns about inflation. Higher petrol prices were, quote, not the reason for today's rate raise, but contributed to inflation outlook. Gotcha. And then we can check out the Aussie dollar before moving on to Bank of Japan. And yeah, you can see right now we are at the edge of the day's distribution. So, I mean, when I said that earlier about, hey, guys, you can't just look at this low and say, oh, that's going to be the low because there's some supports right here. This is not how this works. This is not how this works. When shit hits the fan, shit hits the fan. I mean, it's extremely straightforward. I think we'll end up going more sideways-ish from here into the close, or frankly have a risk of going even lower, depending on how much worse the oil situation here in Australia gets, or the fuel situation in Australia gets. They are particularly at risk. And we can see we even tried to take a shot here. It was a bit too soon. We needed to take the shot up here. And it seems like Ari took that shot, and he is hopefully, I think he's likely doing very, very well, and he's sitting very, very happily right now. Oh, man. Wish I was on the shot as well. Wish I was on that as well. I tried to. Definitely tried to. Okay. Let's go on to Bank of Japan. Dollar yen. Wow. Wow, wow, wow. And we're at a peak in the daily range. So are we going to stop out here and start going lower? You know, when you get closer to the end of the week like this, at these prices, you need a very definitive top wick. You need some very definitive bearish selling to come in. Like, this is where the top is supposed to be, and this is where the high of the week is supposed to come in. And when you still have these very strong bullish volatility candles, it's not conducive to shorting. You need to generally wait till you see some kind of confirmation here. There's also other news coming in. Japan is very, very, very is hit very, very hard by higher oil prices. Is hit very hard by the situation in the Middle East, but the shutdown right now going on in Persian Gulf. Just like with Australia, the Japanese are hit really, really hard. Now, the Japanese do have a lot of reserves. They have a lot of reserves because they are especially vulnerable when this stuff happens. But how is that? How significantly is that going to help with their currency? Because as other assets are hit, it's going to make the dollar stronger. So even if they're able to maintain energy prices through the release of their SPR into their local economy, it still is not going to necessarily stop the appreciation of the US dollar, as even other countries move money into US dollars for as a safe haven. Until the situation with the Strait is resolved, the dollar and oil are expected to continue to appreciate. Okay. In Switzerland, they cut their growth forecast and they raised their inflation forecast, so we can check out maybe Euro Swissy. Oof. Yeah. Swissy's been getting weaker. Euro's been appreciating against it here. Yeah. Odds of a SMB rate hike did go up, I saw. Odds of an SMB rate hike did go up. B of A Fund Manager Survey. Risk sentiment drops. Net 45% of investors expecting higher global CPI in the next 12 months. Up from 9% a month ago. Oh, hell. Okay. That is not transitory. That is quite sticky. Higher inflation in a year from now. Now, that maybe you can say, oh, maybe in the next 3 to 9 months, there's some peak. We peak as far as global inflation goes, and then we start moving lower. But a higher inflation a year from now for 45% of investors to be going that far is already concerning for asset prices in the near short term, as assets reprice into those expectations, into those changing expectations, vis-a-vis oil going higher and inflation-linked related assets also going up. Net 17% expected lower short-term rates, lowest since 2023, down from 46% a month ago. So less rate hikes from the FOMC are being expected. Central banks are essentially 80% of the market is at least expecting a hold. And then this isn't even necessarily including the number of people who are expecting rate hikes. So this is particularly hawkish, if not a more neutral work here. That's not great. That's really, really not great. Global investors turn bearish as Iran concerns and frothy bull sentiment. I think that's very apt. And then other central bank macro data. Okay, FOMC is meeting today. We should have a special meeting to cut rates right now, is what Trump said the other day. When is Powell lowering rates? Yeah, at this point, that is a bit much. Obviously, Powell is not lowering rates. Remember, Powell just got out of that lawsuit. The lawsuit around the spending of the new Federal Reserve buildings. That case has now been dropped. The judge dropped that case, and they said that it was Trump initiating it for political reasons. I think that's true to an extent, but those were legitimately significant overruns on that project that were not insignificant. So it's not like it's not a legitimate issue, but the judge interpreted, even though it's a legitimate issue, you're going at him for political reasons, so we're dropping the case. And we'll see how that progresses. We'll see where that goes from there. And then SOFR rose to 3.7%. Okay. And then back to 3.65% in March. Okay. And then this is some NVIDIA tech related stuff. We can actually pull up NVIDIA. And you can see NVIDIA is not holding up too well. It's had a negative drift here. It's a little easier to see it like this, right? NVIDIA's been trending lower the last few trading days. And it's had this big drop from 200, right? And this was actually just before this was earnings. And then you had, actually, it's more or less been trending up since the beginning of March. But in the last week, it's not trending up at the moment. And that is quite a volatile candle. Holy smokes. The high of that candle was 188 and the low of that candle was 181. That is insane. Then we have Meta, OpenAI. Let's see here. Oh, new model released. ChatGPT 4.5 Mini and Nano. Good. Excuse me. IBM working with NVIDIA. So all these companies making partnerships with NVIDIA. And then Samsung and AMD are doing something as well. I read that. All right, additional major world leader statements from the European Union. And this is more talking about oil. So the EU is not happy. Will work towards a swift end to Iran war. Okay, so Starmer says that he wants a negotiated solution. And then asked advisors about sending help to Hormuz. Trump's claim. We are making significant progress, and we can actually bring up Great British Pound, US dollar here. Well, check that out. I wonder if this is the low. No. There is no peak right here. Now, just because there's no peak doesn't mean that can't be the low. It's just in this area right here where there's no explicit peak, where it's just flat odds like this. It means finding your low here is just as likely as finding your low here is just as likely as finding your low here. So that's why or even just as likely as finding your low up here, right? So I'm always going to be on the cautious side when trading below these green peaks, or not trading at these green peaks where odds are generally the highest. In order to take these types of trades around here, the way typically to do it is you want to put your stop where it's likely not going to get hit. So if it's likely that even if you took a trade here or here or here, that you can actually still see these prices, then you want to put your stop where it's not likely to see your prices. So let's say that's the long. I'd say around here is kind of the minimum place to put the stop, and you can see visually why I would do that. If I do this, so you can see we have this big fatter part of the distribution that's a bit grayed out, and you can have your entry anywhere around in here, but the variability of finding your low in this area is quite high. So to put your stop anywhere in this area with even an entry anywhere in here, it's not fantastic. However, once price trades below here, now you're around the threshold where you can start to see tail risks start to occur. And this is generally where you actually want to get stopped out, right? If you're long, you don't want to be holding your trade all the way down to here in a tail risk move, right? So that's one of the things that this indicator can help the most with. But we do seem to be bouncing at the moment. There's still another 30 minutes on this bar. So we'll see how things turn out. But that has been quite a move lower here. It has been quite the move lower. Okay. Let's see. What else is there to go over? Let's see here. Japan will respond to financial market volatility. The finance minister, talking about this on the dollar yen. And you can see dollar yen is still trading around here at a peak. We need to see a more serious reversal before really assessing this is the likely top. But even then, even if this is the likely top, maybe you just trade sideways into the end of the day or pull back slightly. We can look at closing odds here. Oh yeah, that looks incredibly obvious to me. The close will probably end up being, again, most likely, this is where you have your peak in your distribution for where closes occur by the end of the week. So I feel pretty all right with setting that as my end of day expectation here. South Korea, President Lee said to focus on securing new stable energy sources, must consider worst case scenario. Energy mix should increase renewable energy as soon as possible. We'll decide deployment matters according to laws and constitution, says the foreign minister. Oh, he's talking about Iran here when he says deployment. And the defense minister of South Korea says not considering sending a destroyer to Hormuz. Okay, so the South Koreans are backing out there. India have increased Russian oil purchases this month because the sanctions were released. But the sanctions are going to run out on the 1st of April. So they are likely buying as much as they need. Essentially, the Russian oil sanctions being lifted for India and only India for 1 month is so that then India has effectively some kind of SPR. But we'll see how it goes if those sanctions get extended. But I personally would not extend them. A lot of European leaders were on a phone call with Trump the other day and were quite upset at Trump for doing that, because we know Russia is going to be using that money to fund their war with Ukraine. So a lot of Russian leaders were very, very mad about that. But not Russian leaders. The Russian leaders were actually quite happy. A lot of those European leaders were very, very unhappy. And from what I understand, it was one of the primary things brought up and discussed on that phone call. Let's see here. Trade Secretary in India, the U.S. is working on recreating global tariff architecture. LPG situation remains a concern. From Russia, Trump has not lost interest in Ukraine peace talks. Recommends Zelensky make a deal, and also Putin. He's been still saying Putin. Stop trying to help with Iran. Just focus on Ukraine and coming to a deal in Ukraine. And the sooner, frankly, the better. Oh man, you know the euro is going to jump when that war finally ends. You just know the euro is going to jump when that war finally ends. However, a lot of Russian energy, even after the war is over, a lot of the Russians still don't necessarily want to sell to Europe, even after the war is over. So the jump in the euro is going to come from not having to send as much military aid to Ukraine and purchasing military buildup, and instead being able to fiscally stimulate other parts of their economy. Even though right now they're trying to pass $90 billion in stimulus in a military aid package for Ukraine at the moment, which Orban is currently blocking. He has an election up in April, so everyone's trying to get him out, at least on the EU side. And then we read this bit on Cuba, U.S. domestic politics. Gang of 8 member Mark Warner says Trump admin did not assert imminent threat from Iran in closed briefing. Trump Supreme Court tariff decision won't change tariffs. I start tariffs over again in a different way after SCOTUS. Okay. US-UK trade. Starmer not being supportive is a big mistake. The trade deal probably wasn't appreciated. SEC and crypto. Okay. Commission should consider safe harbor from definition for security for certain cryptocurrencies. SEC clarifies application of securities law. Oh, I remember this. Yeah. This was actually a few days ago. We went over this. Yeah. And this is from Ukraine. NATO's Rutte to meet UK Starmer and Zelensky. Okay, that's good. Market data. All right. And then key themes. All right, sweet. So we just went through all the news that we needed to go through. You can see it's a lot of stuff. And when is the FOMC meeting? So let's see here. We have Bank of Canada coming up here actually quite shortly. In about 45 minutes, we're getting the Bank of Canada rate decision. Wow. The dollar is seriously appreciating against the Canadian at the moment. Yeah. We might end up trading a bit higher here. Again, it depends on how hawkish the Bank of Canada is going to end up being. They're likely going to stay more on hold and have hawkish leanings and saying, hey, if things continue to get worse, we may need to hike to stay accommodative on inflation, rather. To manage inflation, not accommodative. That would be cutting. Rate cuts to be accommodative. But they need to be on the hawkish side here. Otherwise, the dollar is going to continue to gain on them. So yeah, there's the likely low for the week at the peak. And now maybe we trade up to here. About another 30 pips and then go down lower. So let's set that as our little expectation. Call that green. And then we can, you guys don't mind if I do this, right? Well, we'll still update that timestamp then, because now I've moved it. 34. Oh yeah, that's right. We also have to do that. 34. Cool. All right, now we have a bunch of trade plans for the day. And we will see how they follow through and check up on them tomorrow. And we do have a few weekly trade plans as well that are holding up. Let's see. Yeah, so this is actually a trade plan for the rest of the week. And then as far as our trade, oh, check that out. We actually have a peak right here on the daily ranges that lines up with the weekly odds. So maybe we end up hitting this here today, go a bit higher, and then start moving lower after some more hawkish RBA statements. Or rather, not RBA. I'm still thinking of how hawkish the RBA is. After some hawkish Bank of Canada statements come through. Yeah. Oh, man, oh, man. Okay. I am extraordinarily... voice crack. I am extraordinarily happy so far with the analysis. It does really kind of suck to miss out on this trade right here with Aussie, because I did try and catch this and then I did miss out on it, which really, really does suck. But this is also the importance of setting alerts. It really is. And same thing here, right? It's really important to set alerts. It's really nice to actually see when I set trade plans and when they work out and when they don't work out. It's really, really nice to actually see that. And also, it's a nice bit of history because then you're able to actually see over time on the charts. I can just scroll back and show, oh, here's this when I set this expectation. Here's when I set that expectation. And then you don't have to go and watch all my prior streams to know what my bias or expectations were day to day. Now, you might not necessarily understand why I have XYZ expectation or why I drew XYZ arrow. But you know what? It's not hard to figure that out, honestly. Not hard. But at least you're able to see the expectations over time. And that creates some pretty cool drawings with these red, green, and blue lines. Okay. Let's see here. Iraq pipeline exports. We can bring up oil for this. Alternative routes and production. Iraq pipeline exports. Yeah, you can see it's so far off. Okay. Iraq oil minister working to rehabilitate Kirkuk Sayan pipeline. 100-kilometer section inspection to complete in 1 week. Oh my god. Iraq resumes pumping oil from Kirkuk fields via Turkey's Ceyhan port at 250,000 barrels per day. 250,000 barrels per day. Iraq reaches agreement with Kurdish authorities to resume exports from Wednesday. Iraqi Kurdish Prime Minister Barzani decided to allow export of oil through Kurdistan region pipeline at earliest possible time, and the capacity could reach 450,000 barrels per day, including Kurdish oil. Okay, that's nice to see. And that's probably why, because these were all marked March 17th, why oil has been falling here. But this is honestly not enough to make up for the huge multi-million barrel per day shortfall that we currently have, with ships unable to cross through the Strait of Hormuz. So even with this, and it's very nice to have this, it's not going to be enough, in my opinion, to prevent continued appreciation for oil prices. And with now so many asset managers very, very clearly expecting higher inflation into the end of the year, it's hard to justify lower expectations for oil prices, even in the most immediate short term. Okay, I am very, very happy with today's stream. We got a lot of trading expectations done for the week ahead, and it'll be nice to see how well these expectations hold up. And we will be going over the Bank of Canada decision here in just a moment. We have, I think, 5 more minutes until we get the statement from the Bank of Canada. We'll be going over that, and then we'll call that a stream. How's about that? How's about that? So this is the dollar CAD. Now, a more hawkish Bank of Canada could very, very easily go against this expectation. But with the stronger US dollar, still expected to continue being a safe haven asset here, all these other countries, I would still expect a positive drift into the close of the week. The other thing to watch out for is also the Canadian equity here. And let's see. I might not have the Canadian equity markets here. Yeah. I might not have them here. So give me 1 second. Oh, that's right, TSX. And the Canadian equity markets have not been holding up well since the Operation Epic Fury began. Equity markets have not been doing so hot in Canada. We are at a peak, but you can see we've fallen quite a bit there. So it's not too great. Not too great. If we check things out for the week, it looks very, very, very choppy. And if we look at things for the day, also looks super, super choppy. Yeah. Now we're starting to get data cutoffs. When it starts to look like that, we're starting to get cutoffs in the data. Okay, maybe we'll need to find a futures chart, because the futures should have cleaner data here. So that's SXF. There we go. Perfect. That should look a lot cleaner now. No, still not great. It is a bit better. The data is a bit better, arguably. But still not fantastic. Still not fantastic. You can see a lot more data has been loaded now. A lot more data. Yeah. Okay. Let's go back to the dollar CAD because we should be getting news pretty imminently for that. In 50 seconds here, Bank of Canada rate statement. And I now have Financial Juice turned on. So if you hear another voice speaking, it is our friends over at Financial Juice. I'm going to turn down the music just a hair more. So then it's like really low in the background. All right. 20 seconds remaining. And we are going to watch
10 seconds.
Okay.
No change, no change. Rate remains unchanged at 2.25% as expected. Seeing the rate statement now, the Bank of Canada say they will not allow the effects of high energy prices to become persistent inflation. The bank will look through the war's immediate impact on inflation, but the longer this conflict lasts and the wider it gets, the bigger the risks. The risk that energy prices quickly spread to the prices of other goods and services looks contained, according to Bank of Canada's Macklem. Persistently higher oil prices, though, would boost energy export income, but leave consumers less money for spending as well. Labour market remains soft, and recent trade data suggests ongoing weakness in exports. Macklem adds that uncertainty is acute. Economic weakness combined with rising inflation is a dilemma for central banks. And the Bank of Canada note that the recent data suggests near-term Canadian growth will be weaker than anticipated in January. They say the sharp increase in gasoline prices will push up total inflation in the coming months, and risks to growth look tilted to the downside, but inflation risks have gone up. Middle East conflict will boost global inflation in the near term. Potential economic impact of the Middle East war is highly uncertain, but it notes the conflict has heightened risks to global economies, and financial conditions have tightened from accommodative levels, and it's too early to assess the impact of the Middle East conflict on growth in Canada.
Yeah,
we have
doesn't
posted
sound
the Bank of
hawkish
Canada's
enough.
rate statements on the feed for those interested as well.
It doesn't sound hawkish enough. It seems like they took an explicitly more neutral approach to the statement based off what Financial Juice has said. Yeah, based off what Financial Juice just said, it seems like they took a more explicitly neutral approach to the risks to Canada. If they took a more hawkish approach, I would have expected more appreciation here on the downside. But I expect positive drift based off that statement for the dollar CAD. Yeah. All good. Okay. We'll see if that expectation holds up. So I'm still in line with generally this expectation. I don't know if it'll go all the way that high, though I wouldn't be surprised because that's only about 25 pips up from here. And considering the more neutral expectation from the Bank of Canada, I wouldn't be surprised to see higher dollar CAD, a weaker CAD. So with that all said, I think we've now covered everything, at least I wanted to cover for the day. I am very, very, very happy with the stream and those notes. Those notes were really good. I really enjoyed having those notes, actually. But I also will be hopefully doing the same thing with the research threads soon. So then we can get a summary of all of the news that comes out for specific topics that we're researching and specific commentary members in the Discord have on those specific research threads. So I really look forward to doing more streams to covering those topics. And again, it's not just going to be AI summarization slop that I'm reading through. I'm going to still be doing handwritten notes, and I am personally contributing to and watching pretty much all of these threads right now. So I'll be able to interject if I'm reading something from the AI that I know is wrong or is missing a critical and vital piece of information. So I'm not just gonna regurgitate AI stuff to you. I don't like that. I don't like that. But that was an excellent bit of notes from the Discord today. Very, very happy with how today's stream went. Okay. And it was also a very, very successful stream. So many people were watching, particularly today. Thank you guys for watching, seriously. And if you want to hang out in the Discord, chat with me sometime, maybe try out these indicators. Links to the Discord and the indicators and all that stuff, it's in the description through the WAP store. So thank you guys very much for watching, and I will see you all in a bit.